Hello and welcome everyone. Gold has been trading sideways for some time. As we slowly get into the second half of the year, where can we expect gold prices to go? That is the question that we're trying to answer today. First, we're going to look at how gold prices behaved in the last couple of months. Then, we're gonna look at news and trends surrounding gold. Finally, we're going to check some gold price predictions and forecasts, so let's get into it. Today, 9th of June, the gold price is 1,960.8 US dollars or about 1,560 British pounds. Looking at the charts, we can see a few things. First of all, gold hit its all-time high on 4th of May. The price of gold shot up to $2,082, then fell to $1,938 on 25th of May. Since then, it's been moving in a channel between 1,938 and 1,983, with the 50 and 100-day SMA acting as support and resistance levels. If you're not familiar with the term SMA, it stands for Simple Moving Average. When we look left, we can see that we have had previous resistance levels at $1,920 to $1,950, which are now acting as a support alongside the 100-day SMA. The relative strength index is neutral, and right now it seems like gold prices are just moving sideways. However, I think we may be seeing a setup for a new jump in gold prices. If gold prices continue holding this support level of $1,920 to $1,950, the next price target for gold is between $2,050 and $2,100 in the next couple of months. Now, obviously, gold prices can also move down. We don't have an established trend right now, since the current price is below the 10 and 50-day SMA and above the 100 and 200-day SMA. If we do see a drop in gold prices, the next support level is right about $1,800 to $1,825, plus the 200-day SMA stands at about $1,840, so my impression is that we probably won't see prices go much lower than that. In fact, I think gold prices are either going to be stable or increasing. Here's why. First of all, it's very likely that we have got close to the peak Federal Reserve interest rates. A few weeks ago, Jerome Powell strongly hinted that the Fed will not be raising rates at the June meeting for the first time in 14 months. The markets are now leaning towards another 0.25% increase in interest rates to 5.5% in July or September, with only a 15% probability of going up to 5.75%. That seems likely given the stats on inflation. It has been slowing, down to 4.9% in April, despite the core CPI being 5.5%. The expectation for May is 4.1% CPI and 5.3% core CPI. Now, the Fed keeps saying that they look at core CPI, so depending on what the figure is, we could see the probability for 5.75% interest rate grow. However, I imagine that they are going to wait a bit to let the existing interest rates have their effect on prices. As we know, it takes between 12 and 24 months for interest rates to be reflected in CPI figures. At this point, the Fed can definitely take its time and wait out a month or two before doing another interest rate hike. The current inflation trend does not really necessitate higher interest rates in the US, and this is supported by the market expectations. Inflation is also dropping in the Eurozone, where it fell to 6.1% from 7% in the previous month. The inflation in India has also gone down to 4.7%. There is some correlation between inflation and demand for gold in India. Research by the World Gold Council shows that for every 1% inflation, gold demand in India goes up by 2.6%. India is one of the biggest gold markets in the world, so a slowing inflation there may lead to less demand for gold coins and jewelry, so that's something to keep an eye on. However, the all-in sustaining costs for the industry have risen to an all-time high. The latest data shows that the average all-in sustaining costs for the full year of 2022 came in at $1,276. In fact, Q3 was even higher, but AISC ended Q4 of 2022 at $1,279, just slightly higher than the average for the year. Bear in mind, this is the average. There are some gold miners with AISC of $1,600, even $1,700. It's important to monitor this metric because this gives us an idea of how much money gold miners need to spend to mine a single ounce of gold. Basically, it puts a floor to gold prices. If gold prices were to go below $1,279, a big portion of gold miners would be operating at a loss. This means that they will cut production, wait for better prices, gold supply will go down, and naturally, this will push gold prices up. Investors also continue buying, especially in North America. In May, $1.7 billion went into gold ETFs, amounting to about 19 tons of gold. This is the third consecutive month of gold ETF net inflows, and the year-to-date gold ETF inflows are now positive. More money has come into gold ETFs than has come out. However, central banks actually saw a net outflow of gold for the first time since March 2022. In April, official global gold reserves fell by 71 tons, mainly because of the Central Bank of Turkey selling. They sold 80.8 tons of gold, reducing their total reserves to 491 tons. By the looks of it, this only happened because Turkey temporarily banned imports of gold bullions following the earthquakes. The central bank had to step in and sell some of its gold reserves to the domestic market, since people were buying a lot more gold bars, coins and jewelry. Looking at Turkish inflation, it's no wonder that people have been buying a lot of gold, but the import ban really affected the central bank's gold reserves. The National Bank of Kazakhstan also sold about 13 tons of gold, reducing reserves to 319 tons. In terms of buyers, Poland came in first at 14.8 tons of gold, followed by China with 8.1 tons and Czech Republic with 1.8 tons. A few other banks bought or sold gold, but they were tiny quantities. We can see that China keeps buying gold. This was the 6th consecutive month of purchases. There is speculation that this is to do with the BRICS gold currency, and I talked about this in a previous video. However, 8 tons of gold is a small increase to China's existing 2076 tons of gold, less than 0.4%. Overall, the gold demand stats for April were a bit mixed. Had it not been for the Turkish gold sales, I would lean towards bullish. To me, it seems that right now the gold markets are just waiting to see what will happen with inflation, interest rates and so on. Remember, BRICS will also be talking about a gold-backed currency in August. The banking crisis has also settled, but we have seen cracks in the system, and the longer interest rates stay up, the more problems can arise. There are things to keep an eye on, but right now it's a bit unclear where gold prices will go. Will they hit $2,100? Will they drop to $1,800? Who knows? But what I do know is that I am continuing my weekly purchases of gold in my ISA. What about you? How are you feeling about gold prices right now? Let me know in the comments below and leave a like, share the video. Thanks for watching and I will talk to you again soon.